Hi. Today we're going to discuss about adjusted accounting entries. The small session on adjusted accounting entries would be very important one for everyone. So who are into the finance domain or who are part of fund accounting, hedge fund accounting, private equity accounting, mutual fund accounting, or any normal accounting, businesses. If you're a part of that businesses, then adjusted accounting entries will be very important for you. Because see guys, ultimately if you put your logic, if you're working on normal accounting entries or normal transaction like buy sell, if I take the example of buy, so you have purchased something, so you know it when you purchase it there would be two account, one which is asset which you have purchased, assets or goods, and another one impacted cash and the person or entity name, right? So whom you have purchased it, person or entity. If you purchase goods or services with cash, it's gonna be cash based accounting, cash based accounting. So you don't need to adjust anything as such. Record the plain transaction like assets or goods account debit, a debit to to cash account, right? Cash and bank account credit, and your job is done if you do this. But what if you purchase on credit, right, from xyz person or entity, same goods and services, if you purchase on credit and that payment will receive to you or payment will be made from you to that particular person or entity, maybe next month, next year, or upcoming time. So in that case, how will you record that transaction in the books of fund, in the books of account of individual institution, or any governments or any government bodies or any societies bodies and all, right? So that's what we have, two types of accounting, one which is cash based accounting types, very important. Accounting types, one which is cash and another one is accrual base. So when we say cash base, it means it's a net transaction, guys. It's a net transaction. So net means when you pay, when you pay or receive in cash. So when you pay or receive in cash, that you can directly record directly record to P&L or else trade book. So that depends again here. So if it is a direct expense, record it to the trade book. If it is an indirect expense, like marketing, selling, office, admin, salaries, those would be your indirect expenses. And direct one would be your transaction related expenses, wages, transaction commission, trade commission in a banking, which you would see. The brokers, they charge commission, right? And that's what you would have seen term like tradable accruals and non-tradable accruals. Tradable accruals, you can directly record it to the trade book, and non-tradable accruals, it means admin, legal, then other organizational expenses, promotion, marketing, salaries of staff who are working on transactions, right? Those expenses, technology, and also those you can record it to the P&L directly. That's the difference. But when you can record it, when you actually pay it means to directly process the cash payment or to accept the cash payment from the counterpart. In that case only you can record the transactions in the books of P&L or either books of trade book. That accounting comes under cash base. So here in this case you don't require any adjustment. No adjustment required, right? You should know the background why we are adjusting accounting entries and why the adjustment is required and all, right? If you don't know the background, then that would be very tough for you to recognize, reconcile, interpret and record that transaction in the books of fund or books of account. Why I'm talking about fund, because most of the people, they have perception about fund accounting. It means something different, which is a very different from the normal accounting. No, it's not a different from normal accounting. The number of activities that we perform in a day in and day out, those are definitely different one, because we'll have to follow these certain rules and regulations, and that's what it becomes a different one. But the recording procedure would be remain same. In a normal businesses, we record the goods and services, whatever that the normal companies, let's say manufacturing companies or any edtech companies or startups, so whenever they buy something or sell something, any kind of services, whatever that they're offering to their clients, customers, vendors, stakeholders, that we record it in their books of account. And in an investment business, we record the investment transactions. So it means whenever investment companies like private equity house, hedge fund house, whenever they purchase, right, when they purchase or sells, at the moment we record it. That's the difference. And while recording the financial transactions, we'll have to take extra precautions, because we purchase the financial instrument with an obligation. When we say obligation, it can be related to the interest payment, it can be related to the corporate action benefit, it can be related to the any other obligation which defines the future expected cash flows in terms of coupon, interest payment, or any kind of benefit. And that's what it becomes unique and little different than the normal accounting. Because if I take the example of normal goods and services, when we purchase goods, we record it and finish it out. But when we purchase bonds, we also set up the bonds accruals. So it means that particular accrual setup procedure, which you would see something different, which we follow to set up the accruals for a fixed income securities. If you purchase any kind of treasury bills or treasury notes or treasury bonds or government securities, in that case we know it. So we purchase the bonds with an obligation. So it means whenever you purchase the bonds, you need to set up the accruals for bonds. Accruals is nothing but those are future expected cash flows. Future expected, it means when you purchase the bonds, government will pay the coupon on a quarterly basis. It can be on an annual basis. It can be on a monthly basis. So that depends. So you're going to receive some sort of income from the government, and that's what you need to set up the accruals in your account. When you set up the accruals, then when the actual payment date comes, then government will make the payment to you. So payment or cash will receive to you against your accrual setup in your system. That's what. So normal normal accounting and your fund accounting would be little bit different, not the fully, because in a normal businesses also we set up accruals, right? We set up accruals, we set up prepaid expense, we set up outstanding expense, We set up income which we have received in advance from the counterparts, vendor for a service and all. So we set up all those accounts, and all those accounts comes under accrual based accounting as well. When we say accrual, it means here you would require lot of adjustments. The income or expense, whatever it is, income or expense, which has been earned, which has been incurred. If I take the example of expense which has been incurred but yet to make the payment to the vendor, so that expense will comes under your accrual base. If I take the example of income, the income, it means, let's say, dividend. Company announced dividend. Company announced dividend. When company announced dividend, you can record it in your books of account as dividend is accruable. But again, if you see, the dividend is yet to receive or yet to see the effect in your cash balance, right? That effect is yet to see in your cash balance, and that's what it becomes your accrual. Accrue, it means yet to receive. Know it, but yet to receive. Accrual, which will receive or which will pay in near term, maybe in future, maybe in an upcoming time, right? So those are the indicators. So that process we follow to record the accounting entries. And that's what most of the accounting entries which you would see where you required adjustment, you required adjustment and reversal. Assignment required. So that's what it becomes very important. You required adjustment, assignment required. You also required reversal as and when required. Because generally we follow this process. How and why we follow this, we'll take example for one example we'll discuss for accrued management fees or management fees, right? So one example we'll discuss for in terms of management fees. And we'll also discuss one example, simple example for rent as well, because most of the people, they are aware about rent term, rent, right? Okay, so we'll discuss that management fees and rent. So in terms of the adjustment, why we required an adjustment or a reversal, we'll discuss that, right? I'll take you ahead and see the example. First of all, under accrual base, so we're going to discuss about rent. Okay, rent, let's say you are mm, 1000 rent per month. Okay, so this is your property. You are expecting 1000 rent for per month. Let's say you have signed agreement with URA. You have signed agreement with B. Right? You have signed agreement with B that B will pay if you rent out your house. Rent out your house to the B, right? To the B, then B will pay 12,000 sorry 12,000 for per year, and payment will be processed at the end of the year, at the end of the year. And here both counterparts, let's say you are at A means, let's say you are real estate fund, real estate equity fund. A means you are real estate equity fund or real estate fund where you have invested into the homes or flats or under construction properties or properties which can or which are generating the rental income for you, right? So now if you take this example here, the most important aspect of this deal or transaction is the final payment will be processed at the end of the year. So this one is an important one, right? But let's say both counterparts, they are following the expense or income calculation process on monthly basis. Now say this. both counterparts, they know it, their cash flows, they know it, their agreement, they know it, their transaction, what the transaction is. But if you see in this transaction, they are not exchanging any cash, or there is no cash movement at this point in time. So there will be cash movement in cash at the end of the year, right? If there is no cash, and but still they are looking for to record that transaction in the books of account, it means this is an accrual based accounting method where you required an adjustment. Already we have discussed it. As and when required, we'll have to adjust and we'll have to also reverse it. That's what we see some challenges while recording management fees, while recording admin fees, while recording legal fees or any other stationery or miscellaneous expenses in the books of accounting, where we are adjusting the accounting entries on the daily basis, or maybe on the quarterly, monthly or yearly basis, because till you received payment from the counterpart, you will have to adjust your expenses. It's a very pretty simple process, I would say. Okay. So now we know the amount, we know everything. So we'll calculate it. First of all, annual expense. So now for you, right? So here you are from the real estate fund side. So it means here in this case, the rent received, $12,000 would be income. Income for whom? For private equity real estate fund, right? Because they are looking for rental income, and that is the income for that private equity house. Okay, same. So private equity was at A side. B, so the counterpart is B, right? So the same in if the same rent is income for P, then same rent 12K would be expense for B. So private equity fund will record income in the books of private equity fund, and the counterpart B will record the expense in the books of their uh, in the books of account of their own. So we'll brief it out how you can record it, how this entry will adjust and all, right? And then we'll take another one example with regards to the management fees, because when you sit for any fund accounting interview, so you may expect a lot of questions on this adjustment accounting entries, and that's what it becomes very important to know in depth how this adjustment or reversal process works with logic, with rule, right? You should know it if you're looking for any fund accounting interview. So when we say incomes, so here income will receive, right? Not received. So when it will receive at the end of the year. Let's say we are following the accounting method. This contract initiated at 1st of January. Dates becomes very important while recording or interpreting the financial data, okay? Because we are assuming this transaction was executed on 1st of January, right? And this transaction means from 0 to 01 to let's say 13th of Jan or 31st, whatever it is. So all that entries or all the data that we record, right? Maybe in the month of Feb, first week. So every month in a first week will record that particular month's previous month's accruals or previous month's transactions in the books of fund, and then we'll calculate the gross asset value of a fund, right? Here, if you see, now you know the terminology, you know the duration, how you gonna calculate it, right? And in this case, we have a simple method. You don't need to put much of your time and all to calculate, okay? 12k, it means 12,000, let's say USD. 12k is for 12 months, would be 1,000 for per month, right? So here B will treat as an expense, same, and same amount P fund will treat as an income. But if you see this income is earned at the end of the January month or in the Feb month, what we'll see, the private equity fund earned how much? Earned how much? 1,000 USD. And expense, if we see, incurred how much? 1,000 USD, right? But yet to pay. Why yet to pay? It will process on or at the end of the year as it was agreed before entering into this particular contract. But already both the counterparts they have confirmed where they'll process or calculate the expenses on an monthly basis, right? So when they have decided to calculate the expenses on a monthly basis, so it's become very important to calculate the expenses and to record it. So it means when you update the amount 12,000 and when you update the duration which is 12 month in your system will automatically set up the accruals. System will set up the accruals, so which is 1000 the income due from the counterparts in your system, which you would say it, right? You don't need to do anything as such. The fund accounting systems are very advanced systems. You need to update the 12k amount, currency, account number, counterpart, description, provide it, update it, system, and update the duration or date, I would say. Automatically system will calculate the accruals, which is 1000k for per month. That's it. If you do this, automatically system will update the accruals for you. That process we call it as accrual setup procedure. Right? Both the counterparts will do it. And every month, so we'll record the accounting entries where one will treat income. So it means one will create rent receivable account debit to rent income account credit. Every month you need to prepare this accounting entry and record the 1000 income in your books of account, and your job is done. Same the expense side, the expense counterpart that will treat rent as an expense, rent expense account debit to rent expense payable account credit, same amount. Because for B, so it's a liability. And again it's a expense, part of nominal account. So meanwhile, this liability you can record it in the books of or statement of balance sheet. So that's how we record the transactions in the books of account. So every month you will have to prepare this accounting entry. Every month you can prepare it out. But so when you want to reverse it out, because let's say from January to March end, from 1st of January, let's say, to 31st of March. It's a 3 months, right? And if you see the rent, 3,000, you will have two options. Every month you can prepare this accounting entry. Every month you can prepare this accounting entry, or else, just to avoid multiple records in your books of account, reverse the previous one accounting entry. So this one, reverse it. How will you reverse it? Write it down if you want. Reverse procedure. Rent expense payable account debit 1000 to rent expense account So this will debit debit, credit will 0. So might be you would have questions of what if we directly delete the record. In accounting, the deletion is not allowed. And that's what it becomes very important to reverse it out. But again, the reversal procedure is not a mandate one, it's an optional. So keep that in mind as well. In your company, if it is allowed, you can delete it. If it is not, you can only reverse and recreate the record. So now it means here expense, whatever expense that we recorded in the books of B, we record it first and then we reverse it out. So when we have reversed it out on 31st of March or after that, because now we have a total expense of 3000, so that we need to record it. So now again record the total expense rent, debit. Pattern would be remain same, only amount will change. Okay. To rent payable account. See this. So this accounting entry you can carry, and again every month you can follow the same, right? Every month you can follow the same, you can record it, reverse it, record it, reverse it, because at the end of the month or at the end of the year you should have only one entry with the amount of 12. So that's the main goal, 12k. Okay, so why so, sir? Why this? Maybe you would have question, because against one, see, if you created 12 entries for 12 months, right? But you would receive only one, one go, that 12,000 k USD, whatever it is, in your bank account, right? Then that would be difficult for you to verify. So 12k against 12 transactions for different months, then that doesn't make sense at all. So instead, that only if you create so one entry at the end of the year, so it means reverse it, create it, reverse it. So at the end of the year, so you should have only one entry against the one bank account statement transaction. So that will easy for you to reconcile it. To reconcile it, right? So this process comes under the adjustment. And what about an adjustment? So adjustment, which is something where, so this payable we actually gonna at the end of the year, so it means let's say year end. Now here the 31st of December come, 31st of December come, and we are done with the year end. We are done with the year end. It means let's say tomorrow onwards we're gonna pay the rent amount to the landlord or to the private equity fund, let's say. So we are paying the 12k amount to the private equity house. So in the books of B, we'll just reverse this payable. See how it will work. Rent payable account debit to cash and bank account credit. So at the end of the year, so payable, now you don't need to record it anywhere, you can remove it automatically. Don't need to remove, it will automatically remove, because this debit payable, and in the previous entry if you see the credit payable, debit credit becomes offset. So you will have only plain entry, which is rent expense account debit to cash and bank account credit. cash will adjusted in a bank balance or opening or closing balance, whatever it is that you have in your books of account, right? So that you can record it. Okay, and your accounting entry, and then you are done with your accounting treatment or entries. So that part comes under your adjustment part, where we need to adjust those accounting entries. Okay, so that's how we prepare the accounting entries and the cash base and accrual base. So this was one example. So we'll continue the same management fees and expense account part, right, in a next example, so which will have a better idea about so how you can record it those, right, on a day-to-day life of a fund or particular company or institution where you're working. So just hold for a minute, I'm facing some issue with the board. I hope guys this initiative is helping, and if you like this initiative, you can send it to others as well, so let them also learn it. So it's a very important one. Okay, and if you like this initiative, uh, then share with others. So that will help us a lot to to do more, and that will encourage us to create the content like this if you like this initiative. And it's a very important one, because that give us a lot of energy to do more, to do research and to study more, and then to develop the video recording for you guys. It's not an easy one. So what we expect, like, your genuine feedback. If you like this, then click click on like button as well, because it's a very important one. And if you haven't subscribed it, subscribe as well. Your subscription is also matter a lot, right? If the content is insightful, you should always respect for that and record it out. Okay, so without taking much time, so I'll jump on the management fees. Management fees. So how we calculate the management fees? So here I'm not going to discuss the different things, because you would see commitment based management fees, commitment based, right? Then unit based management fees, so unit base is nothing but it's the current asset, or NAV base, I would say. NAV base fees. NAV base fees. So on time to time, monthly, yearly, quarterly, daily. So whatever accounting cycle that you're following, on the basis of that, you can calculate the net asset value of a fund, and also you can calculate the management fees, which is 1%, 2%, 3%, 4%, 10, 20, 100, whatever it is. So max to max, you would see 3 to 4%, not more than that. But still, so you would calculate it, apply to it, right? So that's how we calculate the different fees and apply the accounting treatment in the books of fund. But in this example, we're going to discuss about commitment based fees. So commitment based fees, it means whatever commitment that is committed by the investor. Let's say uh, on 10 lakh, so the fund will charge, GMT fund will charge 12,000, right? And this will be on a per annum basis. So when we say per annum, it means every month GMT fund will charge 1,000 USD to the investors as a management fees, and that management fees we need to set up. It means against the investor, right? And to that particular fund, let's say under class A, we need to set up the accruals by the name of management fees or investment manager fees, right? Set up the accruals as a management fees and update the system. So automatically you would see every month system will update the accruals amount, and that would be there in your system. Let's say fund is at a payable side. If the fund is at payable side, then accounting entry would be management fees. It's an expense, right? So management fees account debit. The amount is very important. It's a monthly accounting. You need to record it monthly. To payable account credit. So that's how you can record the accounting entries on a monthly basis till you receive the cash from the investors or debit the cash from the particular funds book. You can record it, this accounting entry. And same reversal entry which you can prepare. It's not a mandate one, but most of the funds they follow it, where this portion will be debited, will be credited, and credited will be debited. Simple. Management fees debit to management fees account because at the end of the again so the next month, so the first month's accruals need to reverse. Why need to reverse? You can repost the accruals with 2 months of total amount. How much? 2000. Then again you can repost the same accounting entry, this one. This accounting entry you can repost it. So you can update the amount, that's it. And might be in your accounting application system is doing for you guys, and very next day when you logged in, so you are just updating the the entry, this management fees account debit to management fees payable account credit. So might be that you're only updating the amount, and this is how you're working. Right, because most of the time systems that perform the reversal procedure on their own. Okay, and at the end of the year when actually receive payment, so your accounting entry would be so that entry also will processed. Let's say at the end of the year that amount is payable around 12K. So this payable would be your debit payable that you need to remove, right, or convert into cash. Then payable or payable account debit to cash and bank account. Credit. So this will be automatically removed from the system. So net entry would be like this: management fees account debit to cash. So this is where you can record it to the P&L. Cash will be automatically that you would see the impact on cash balance, which is opening or closing cash balance, right? So that's how you record it to the P&L. And when you record it as a payable, so this will be recorded to the balance sheet, right? So just let me quickly brief what we have discussed, or I would, in short, just I would like to summarize it. Accounting types that we have discussed: one which is cash method, and another one is accrual method. Accrual method is for all pending expense. What I understood is pending expense and income, so which has been earned or incurred but yet to pay or receive. Cash means net transaction which has been paid or received. Which has been paid or received. Right? And the important is the all cash transaction you can record it to the trade book, and P&L. So all accrual or pending expense that you can record it to the balance sheet. That's the difference, guys. Okay, so this is how your different accounting types works. So just follow to this series. Maybe I'll discuss few more examples in an upcoming time on outstanding expense, outstanding income, income received in advance, fees received in advance, subscription received in advance. So all that terms so that we might discuss. So I would request you to stay there to get more updates. And it's a year end, guys. So if you're looking for any course, if you're looking for any material, any kind of as such, so you can visit to the www.ivfundaccounting.com. Okay, and check the courses, exciting courses for you. So we have a certified investment banking course, we have a certified private equity hedge fund course. So just I would say, if you're looking for a training courses, anything as such, get connect with us. So we'll provide you the certified courses. So we have just type with the Wall Street Oasis. So they also offer hedge fund and private equity courses. So where we offer trainings and all. So that will help you a lot to enhance your alternative investment, banking or investment skills to get good exposure in your career. Okay, so yeah, and again, this is the end of 2022. So I wish you a very very happy that in a new year 2023. So may God bless or give you a lot of strength or health or wealth, right, knowledge, prosperity and everything to you in upcoming time or in 2023. So that's the wishes from my side. Stay healthy, stay with your family, enjoy your time, right? And I would say do plan, guys, to to do something in your life. Don't waste your time. Year on year will come and go, but ultimately the important as time is very precious, so you should always look for time and see how you can utilize it. Okay, so we'll see you in next session. Bye.